Hi guys, how are you doing? This is Ray from Next Forex Trade. Today is Friday, the 8th of August 2019. It's about quarter to six here in the UK, and going to kick off here now this morning with just an overview of the positions that I took and some of the ones I'm in. So you can see that I've closed out this Euro USD at break even. Just over break even, and I currently have a position in on a short on the GBP CAD. So let's just have a look firstly at the Euro USD that I closed out on. I'll then go on to the GBP CAD, and then I'll just do an overview of what I'm seeing in the market. Not looking to take any additional trades today, it being a Friday, and as I always say, if I can avoid it, I don't like taking positions over the weekend, although there may be some exceptions, which I'll come to a bit later. So first of all, let's have a look at the Euro USD. Now this one was one that I was bearish on, and overall I am still bearish on this. We can see from the daily that we've got some clear signs of bearishness with lower lows, lower highs, price interacting with our standard deviation channel. So this is, I'm still looking for opportunities to potentially short this next week. But after entering this, I decided to break even because the price action on the lower time frames wasn't doing what I wanted. And when that happens, the best thing is to get out of the trade if the market allows me to. So what was good about this was, like I said, the daily is clearly showing signs of bearishness. We had that nice area of resistance which we could trace back, giving us a good reference point for our stop loss above this level. Now the 4 hourly was probably the most problematic of this, because what we were seeing is this retrace here that we're seeing on the daily is this movement on the 4 hourly, and the 4 hourly, if I blow this up, you can see it's definitely starting to be a lot choppier. Obviously yesterday didn't have all of this information, but it was a retrace that was still within this standard deviation channel. So that was worrying, because if I'm looking to short this and this standard deviation channel is up, really I want the movement to be down, so lower highs and lower lows, and it breaking through this lower edge here. Now regardless of that, I did take the position because I deemed what I was really looking at was this movement, the way the standard deviation was kind of capturing this price movement down here, and it was one of these ones where when a lot of the factors are there but not everything, then there's basically, there's a few options you can take. You can pass on the trade, which quite often is the best option. Don't trade it. There's always going to be other opportunities. Or you can basically, if you're not sure on it, or not all the stars are aligned, you can take the position at the lowest risk in your kind of risk threshold. So typically I take trades between 1% and 2% in terms of the overall risk that I put on the table. Because the stars weren't aligned in this instance, this was a 1%er for me. Now if we go to the hourly, we can see how this kind of played out. I'm going to have to blow this up a bit. So it may look a bit confusing, but this is our standard deviation channel again, and this other line that you're seeing down here was my entry point. Obviously the market's moved on since then, but at this point I had shorted it at this level, right? And that was determining that the bearishness on the daily, and there was some scope on the 4 hourly as well. So I was looking to short this, and I did short it. And not long after entering, if we get to the end of this, come on. Not long after entering, the price action started to move a little bit more erratic than my liking. What I ideally wanted to do, it was a bit of an aggressive trade, because ideally it would have broken this kind of area of support, and I sold pretty much into that support. I wasn't too worried about that because of what the daily was saying, but I effectively sold into it, And not long after doing that, the price did pull away and start to make this movement here, and moving outside of the standard deviation channel that I had around the price as well. So at that point, I decided that the price wasn't doing what I wanted. What I envisaged was the price starting to make lower lows not long after my entry, and it has started to do that now, but I wanted it to happen pretty much in the candle or so after my entry to break these lows and start moving lower. It didn't. It pulled back, and I knew, because of where my stop loss would have been above these previous highs, which on the daily was, if we look here, these levels here, right? So above the lower high of what the downtrend on the daily was doing, there was, it's a sensible place to have had the stop loss, because it just gives me room to maneuver if the price started to do something that was quite erratic and start approaching these highs. There's still a good probability that it's going to pull back and at least test these levels again. So I decided to exit this. Also the lower time frames as well showing signs of potentially going higher as well. It was in fact this candle here that on the 15-minute, which was the warning sign for me, and it kind of pulled away, and then I got out a few hours later at break even. So effectively what I'd be looking for if I were to approach this again next week is for the price to definitively break these previous lows here, right? Let's use this now. So this supports here, get rid of that. So this support here has been quite significant, and it's also this level here that's keeping up the price within this standard deviation on the 4 hourly. So if it were to kind of break through this level and pull back, that would give a decent entry signal. And obviously, based on the daily, we've got a lot of scope to the kind of downside, if you like, to at least a 1-to-1 in terms of reward to risk upon an entry. Could have a stop loss above here, or even a previous day's high. So just eyeballing that, you can see that the profit targets are going to be around here, or going out for a bigger move, say a 2-to-1 reward to risk, even down here or beyond. But really it's a wait and see until next week as to how that price action plays out. So for now, I'm not looking for any trades on the Euro USD. So next one that we're in at the moment is, if we go to trade, you can see I've got positioned 2 positions here in the GBP CAD. Come on, sorry, just fiddling around my charts here, 1 sec. Okay, so GBP CAD. Et voila. So the GBP CAD, take this off. So the premise for entry here was the fact that we've seen some nice lower lows and lower highs. What wasn't great was the fact it's hugging the average here rather than interacting with the upper edge here. But there was this nice reversal candle that we saw a couple of days ago, and the price moved past the low, which was the day that I entered. And if you see this green, the top, I don't know if it's green on your screen actually, because looking back on YouTube, I don't think all the colors are picked up, but this line here where the mouse is, it was my first entry. So it wasn't long after the price had moved past the low, and especially with reversal candles, because I'm deeming this as a reversal candle. The price moving past the low is important, because if it doesn't do that, then it's in my mind it's too aggressive, because what I'm assuming in this move is this is a lower high in this move, right? So we've seen the price move down, create these lower highs here, and I'm assuming this is a lower high. What confirms that is the price moving past the low. So for me to just enter just on seeing that on its own without the price moving past the low, it's a more risky type of trade, because the price could effectively still move much higher without even going past the low. So that would invalidate as the reversal candle. Now, of course, it could still engulf it, could move past the low and then move past the high as well. But it goes back to what I want to see the price do to validate my decision. And in this instance, what I'm anticipating is lower highs and for the price to continue lower. So it showing its cards and moving lower is a good sign to trigger my entry. So the daily was looking good on this, and obviously I was looking for the lower time frames to give weight to me entering the position. The 4 hourly, it's the same price that I've got there in standard deviation that was on the daily. And what also was kind of suspect about this one is a similar thing. When I entered the trade yesterday, the price was it was up here, right? So it was still within this retrace of the standard deviation channel. So that retrace could have moved much higher, which is why at this point I'd only entered the 1%. And my stop loss as well, you'll notice it isn't above this high here, which is on the daily, this candle, this reversal candle. I decided for a few reasons to have a slightly lower one. It's definitely above that high is the more conservative type trade, but it also means that the profit target needs to be much further as well. So I won't go into it too much, but basically this level here was in my assessment enough of a stop loss outside of the danger zone. There's enough scope of where I place this to say, okay, if the price starts to approach those highs, there's still enough time to maneuver and potentially break even, take the position out, but it's still far enough away to kind of give me, you know, wiggle room and a nice size position as well. So the first entry was here, still kind of within the danger zone because it was this within the standard deviation on 4 hourly, but I also entered another position not long after it had broken. It had given me some confirmation that it was breaking lower to make lower lows and potentially lower highs as well. Now I mean I saw that on the 4 hourly, but that wasn't the basis of my entry. I was using the much lower time frames for that. So if we're looking at the 15-minute here, so this is a 15-minute. This was my second entry here. This line here indicates the second entry. This was the first here. And I was basically using the price action to determine the entry. So what I had seen on the 15-minute, also on the 5-minute as well, was the price in that most recent move down create a standard deviation channel where it was coming up and interacting with the average of the standard deviation. So in a downtrend or a downward move, basically what I would expect to see is signs of reversal off of this level or off of the upper level. Obviously for the better entry, better value for money, it would be up here, but this was enough confirmation for me here to short based on this interaction at the average here and a move past the low of the candles that were interacting with it. Also signs of resistance. If we look at these highs, if we trace that back, there'll be previous support and resistance as well, to give a good indication that this in fact was a lower high. So I scaled into this, I added to the position because the price was doing what I wanted it to do, and moving in a way that I wanted it to. So yeah, I've got 2% in total on this. So there are I'll probably have to cover this in another video, but basically there are two targets on this. So the first one here is the 1-to-1, and I may move this again. I'm letting the lower time frames dictate how I manage this. I'm not going this level here is basically an arbitrary level, right? So if the price drops down, hits it, great, you know, I'm out. But there are ways that I can manage this to milk more profit out of it, which I'll likely cover next week. But I'm anticipating, based on the daily, that the price is going to, if it does continue to be bearish, potentially come down to these type of levels here. Again, these are all arbitrary levels that I've put in, and using the lower time frames is a much better approach. But this is just one of the ways I want to convey how you can kind of make more out of a trade beyond the one-to-one. So we'll just have to see how this plays out, and I'll explain a bit more after this is exited how I've managed this. But yeah, this is in profit at the moment, and yeah, I'll explain after I've closed out on this next week how the approach to this was done. So let's just have a quick look through the market in case there's anyone who has a desire to trade on a Friday. So we've got the AUD CAD here. This clearly is bearish. We've got some nice interaction with our average from the standard deviation channel. As I said before, ideally it would be up touching these levels like it did here, but it's still viable to take a position as long as we've seen clear signs of reversal at the average. You can still take a position, slightly riskier. What gives this a bit more weight is the fact that the 4 hourly is interacting with the upper edge here, and we've seen a reversal candle off of it as well, and the price move lower. So that gives basically the context to say above this yesterday's high is a good area for stop loss. Right, just bring that down a bit. We can see if we look on the daily, no, it doesn't really go far that much on the daily. So this level here, I'm just looking to see if there are any other clear areas of support or resistance. No, there will be on the hourly most likely. You can see here, so the way this high here, which is the same as this high here or this high here, we've seen these areas where it's kind of finding support previously. So the price could find trouble moving much higher than that, and the fact that it's in the standard deviation here as well is a good sign. We've got these lower highs now potentially on the hourly, so I would be, the way I play this is look at, come on, standard deviation, there we go. Yeah, there's viable entries. There's viable, I would be thinking if I were to short this, no more than 1%, even potentially 0.5%. So stop loss above this level. 1-to-1 would mean our take profit would be, so what's the distance from our entry here? So that's about 60 pips. Yep, that would be achievable by end of day. I'm not saying it would happen, but I'm just weighing up what would be likely, because I wouldn't want to hold this over the weekend. What I'm trying to assess is, right, taking the entry now, have I got a good area for my stop loss? Yes. Is my price target achievable? Yes, because it's kind of within our standard deviation. It's before the average, and that's generally a better than it being, you know, much lower. So if it was these kind of levels or beyond, that's not as achievable, because it's got to go way past, you know, into an oversold region to hit these kind of levels here. So around the average, around the mean is more probable. And yeah, the positioning on this wouldn't be bad. It's just not my cup of tea to trade this type of thing on a Friday, and I'm already in a position as well. So AUD Swissy, no, too oversold. So I'm just going to cycle through these. No, too oversold. Always looking at the daily as well. It's my first point of reference. No, too oversold. No, oversold. No, no, positioning isn't great. No, no, too messy. No, no. No, no. Already looked at this. Euro USD. Waiting for breaks of this and a pullback. So potentially today, yeah, that could be something to consider. It's just breaking past these lows here and pulling back, which is achievable because it's still quite early in the day here. This is yeah, this looks okay. This would be a 1%er. I would consider. Now the problem with this is this is quite, it's a bit far gone in terms of where our lower high is, right? So to have the most conservative of trades, we'd want our stop above a lower high. But if we look at how far that, come on, if we look at how far that stop loss is, that's 400, whoa, 420. Oh, okay, it's GBP AUD. This is quite a rangy type of currency. So it's although that sounds a lot, it's not that much in the context of this currency pair, but it's still too far in terms of what it could achieve on a day. We've got to have our stop above here is about 400 odd pips. So that would mean even on a 1-to-1 reward to risk, our profit target is, you know, way down here, where it has to be really oversold to get out on a 1-to-1. Now, you know, the market can do anything. It could reach that on one day, but if we look at this indicator here that I have on, which is the ATR, average true range, we can see typically on a day this market GBP AUD will do about 160 pips. So you're looking at, you know, almost 3 times its average range to hit your take profit if you were to position this with a conservative stop loss. Now, you know, got to think as well, if you were to do this, if it's going that kind of distance, you're going to have to hold a position overnight, and you'd need to check what the swaps are on that, and you've got, so you'd be paying the swap on this. I don't think you can see it on your screen, but it's minus 3.9 of the base currency, so per lot. So there'll be a cost for holding this. This doesn't stack for me because there's a cost for holding it overnight and it's got quite a distance to go. That isn't great, but there are other reference points that I can use in this price action to have a kind of a lower stop loss. So what I'd be looking at is, so on the hourly, we've already seen some nice downward movement, right? We've seen it break this previous price structure, start to make lower lows, lower highs. So like I said, the most conservative trade would be stop loss above here, but that's a bit too far. But I'd use these lower highs here as a reference point. And this is similar to how I entered the GBP CAD that I'm in at the moment. So stop loss above this level, these previous lower highs here, is still okay because look, it's outside of our standard deviation channel. This red line here is the same level on all the charts. So with our stop here, we've got it outside of this standard deviation channel, which is, you know, good enough. it would mean our 1-to-1 would be a distance of around 280 pips, which would put our profit target around about here, bang on around this kind of the lower low, which isn't great, because ideally for taking profits we want to take it before previous lows, because as it approaches this level there's a good likelihood it's gonna bounce, it's gonna pull back before breaking. We're anticipating it breaks, but yeah, it's tradable, but it wouldn't be the best of trades. If you wanted to take a punt, 0.5% wouldn't be one that I would take. So the trade structure would be shorting, stop loss above either this high or this high, these highs here, going for 1-to-1 raw to risk with the prospect of closing out by end of play today on Friday. GBP CAD already in, already discussed that. GB Swissy, 2 oversold. Yeah, that looks okay. The same thing as similar to the other charts. Basically, it's this retrace that's the problem. So it looks great on the daily, moving away from the kind of overbought region where it's interactive with standard deviation, but it's still within this channel here on the 4-hourly. So we do want to see it, and also if we look at the hourly, it's still making higher highs, higher lows. So it would need to break this horizontal support, so break out of this standard deviation channel if you like, which would give context to the price moving in this downward channel here. So if it were to break past these lows, definitively could look for a pullback to either the average, so your reversal candle off of the average of standard deviation channel, or the upper channel. But yeah, conjecture until that happens. It might just flatten out and go much higher and continue with this. So it's kind of wait and see. No, 2 oversold. No. And our old friend Bitcoin. Bitcoin looks like it's having some trouble around this level here, potentially flattening out. So let's just discuss this. So Bitcoin at the moment definitely bullish overall, because if we look at the daily, we can see this movement up here, clearly making lower high highs and high lows. Our channel on the 4-hourly nicely within the standard deviation channel, but if we look at how it's kind of these highs here have found resistance, so these highs here, I mean, that isn't as significant because of where it's placed, but it's still some zonal resistance. And looking at the lower time frames as well, like the hourly, you can see it's kind of double topped, and it's kind of come down and done a triple top almost. So this kind of movement here, it's just testing it. So if it were to go much higher than that, then it's probably going to be a significant break to the upside. But just looking at the way it's flattening out on these lower time frames isn't great. But yeah, if it were to break, the way you could play this is wait for the break, see it pull back, find some value for money, use a standard deviation channel, see if it interacts with the average or the lower edge of the standard deviation channel, and look for longs based on that. And I mean, a sensible stop loss level would probably be below these lows here, kind of outside of the standard deviation channel on the 4-hourly. So these lows are the reference point, so lower than this. But yeah, that's it. So I will be back on Monday with an update, just to talk about how this GBP CAD trade goes, and yeah, I will speak to you then. Bye for now.